in alternative investment, it's a very risky kind of investment in markets. So the higher the risk, the higher the return, yes, but you need to know how to manage the risks. Yes, understanding the fundamentals before you go to any business or any investment is very, very key and important.
Hello everyone and welcome to Royal Trendia with me, Beatrice Kageha. We are located along Thika Superhighway in Ruiru. And today my guest is a CEO. Welcome to the show.
Thank you so much.
You look so amazing.
Thank you.
How have you been?
I've been fine. I'm doing well. I'm doing okay.
Okay, that is good. And for our viewers who are viewing you for the first time, can you kindly describe yourself to them?
Okay, my name is Rhina Namsia, and I'm the founder and CEO of Acemt Consulting Company. It's a company we do training and consulting services on financial planning and advisory on investments. Yes.
So when did you start the company?
Okay, the company is a bit young. It's like a year old, but I've been doing this business for like 3 years now.
Okay.
Yes.
So what inspired you to start that company?
Well, I've always had a passion in finance, first of all. So that is what I did even in school. But then I came to realize when it comes to investments, most young people have no idea of what investments are and where to invest in. And so I took upon myself to push this agenda of financial literacy, of how to invest, how to save, mostly for the young people and women, mostly. That is where my passion is.
So,
yeah.
So to you, the older people knows what it means by saving and financial planning.
I can say not all of them know, but a higher percentage. My drive is to the young people because we're the next generation. So we need to change this narrative of how people invest their money and retaining wealth and all, because we're the next generation. Maybe we can do better than our parents and take this knowledge to another generation.
Yes. So, and this drives me to the next question. So, at what age does one need to start investing?
Investing has no particular age to start investing in, but we can say there are various ways one can start investing. So there are avenues where you have to do it by yourself, meaning you have to have an ID. So basically at 18 years old, you need to start actively investing. But having the knowledge for investing and saving and money matters. This is something that should be incorporated even to our kids and children. We should not wait until they're later on in age, in their teens or after 18 is when they start knowing. This is knowledge you're supposed to, because investing is more of having the knowledge than just doing it, because before you do it, you need to have the knowledge. So this is something we need to teach even our children about money.
So for those who are not investing, should we blame the parents? Maybe they never took their role as parents. They never played their role right in their lives.
I don't really like taking the route of blaming anyone, because probably even the parents have not been taught this, you know. So it's something, if I have to blame, maybe I'll blame our education system. This is something that needs to be taught every now and often, but in our syllabuses, it's not incorporated in our syllabuses, financial literacy. So I'll not really blame the parents. They probably don't even know that. And maybe they know, but they don't know how to teach the children. It's something that needs to be taught continuously. Yes.
So I would wish to know, how much does one need to have for them to start saving? You know, there are some of us who think maybe I should start earning this amount for me to start maybe investing. So maybe you can tell us, how much can one start saving?
Okay, when it comes to saving, in finance, we have different people applying different principles and rules. We have the 50-30 rules of spending, saving, and what you need to keep. So I would say you need to save at least 10% of your income. That's a general thing to say anyway, because someone who has a monthly income of say 200,000 and someone who has a monthly income of 15K, the 10% is quite different, because so then it brings you to, that's where the financial planning bit comes. Financial planning is a very wide topic. It does not only focus on saving. So I can't tell everyone else save 10%. That's just a general thing, an easier way to make people save. But for me to help you know what to save, I need to go through with you through a financial plan to know what are your expenses, what are you able to save, what is your income, so that I'm able to tell you this is what you can spend and this is what you can save. With time, maybe you can grow it with time, So there are different rules and principles applied, but I like customizing it to a person, because people are different. People have different lifestyles. People earn different money. Some people don't even have an income, but then you tell them to save something, So you can't just tell that someone to start saving. You have to take them through something of maybe earning an income first. Yeah.
So, there are some of us, this is a behavior that is very common.
Yes.
Like the more you earn, the more you spend.
Yes.
Like someone might think that I'm not saving right now because I'm earning very little.
Yes.
But now when you start earning more, now responsibilities become I don't
more.
know why. Is it discipline or how do you call it? It's a discipline plays a bit a role in it, but then again it's a culture, and it's also something that is it's applied in economics, that the more you earn, your expenses also go higher. So because it's somehow a culture that needs to be changed, it has been given to us somehow. That is how we know how to live and how to spend money. But then this is something, if you start early in life, that's why I'm saying it's good to incorporate it to children as well, to start it early, so that they know, once you know how to save and the importance of saving and investing, not just saving, then as you grow, you will get to understand that even if I earn this money, there's a time I used to save and it did me so good at some point. So because that culture can be incorporated early in life, then when you continue growing, you get your first job, you get a second job, probably a higher pay, then you will understand that probably you've been saving, say, that 10% from your first job. Then when you get a higher pay, your 10% still stands. Probably you've been automating it from your account, right? So that 10%, even with a higher rise, the 10% is rising, you see? And then then again, discipline comes into play, because with discipline, you are telling yourself, you have your goals, you have your principles, you have to stick to them. That's now discipline. And discipline as well has to be incorporated early in life. It's not easy to start it later in life. Still, it can be done, but it's easier when you started early in life. Yeah. So it's somehow a culture. The more you earn, the more because you don't understand the benefits of actually investing, not just saving. Yeah. So I think if you understand those benefits, then it can be easier to. And can you please tell our viewers, or even me, I'm part of that, the importance of saving?
Okay. The importance of saving is that when a rainy day comes, that's something that crops up abruptly. Maybe it's your health, maybe you're sick, you need to rush to the hospital, or someone that you love. You'll have something that you can go back to, because it is an emergency, right? You can go back to that pocket and use that money. That will save you a lot. From maybe you don't have an income right there and then. Maybe you can't even borrow. Maybe you already have debts, but if you have a saving somewhere, that will help you a lot. And then when you learn the culture of saving, then you come and understand the importance of investing, because saving alone is not enough. Because there's inflation that comes into play as well. So you need to put your money to work. So once you understand the benefits of also investing, then you have something to start investing with. Unlike investing, but you have nothing saved. So you don't even know where to start investing from. You see, so when you understand the benefits of emergencies coming in, maybe you want to go to school as well, and you have something to start with, then you can get that going.
Or even we've seen during this corona period, people lost their jobs. So I'm trying to imagine those who lost their jobs and had not saved anything. I'm just trying to imagine, maybe you have a family that is looking up to you, you have responsibilities. I think corona has also taught people a lesson.
I hope so, because again, people get to learn, people get to experience these things, then they forget when they get back to normal. When it comes to money and finances, the culture of saving and investing is really, especially in the African culture, we are still so much behind. So I hope people have learned that you can lose your job anytime. Your job is not guaranteed. So you need, when you're earning that monthly income, how are you putting something aside for saving? Are you investing that money that you're also saving so that it can grow and give you a passive income, so that in case you lose a job? Because when it comes to financial planning, we have something called creating an emergency fund. So this is a fund that you say maybe you add up your all expenses for say 6 months or 1 year. Then that's like a target. Now you need to save that lump sum. So every month you put something into that fund, knowing that in case you lose a job, that's something that can pay up your expenses for the rest of those 6 months as you think of what to do next. If something if you have a loved one who's sick, maybe your mom, your parent, your child, or your sister, that's a fund you can go to. Instead of going to take a loan. Maybe you have a car, it needs a service, urgent one. That's a fund you go to. You don't, that emergency fund, which is a savings account, is an account that really helps you when you're caught off guard and so many other things. Yes, especially that job loss as well.
Talking about corona and all that, so you as the CEO, so have you been affected? Has your company been affected by corona?
Yeah. We've been affected because we are not able to take in clients because clients don't have the money to pay for the services, So our services are most of them are paid for. So we don't have clients coming in, or that people want to learn now about saving, investing, and that financial planning because they've lost their job. Now they're starting to understand the importance of money, but then they're not able to pay for the services, you see. So sometimes I have to give discounts or have to give some services for free, you see, but you have operational costs as well. So you need to cover those costs at the same time. So clearly we've been affected by our clients not having the money as well.
I understand. And do you mind sharing some of the services you offer and how much you charge for those of us who would wish to get your services? And maybe improve on how we do our financial planning, how we save, and how to invest.
Well, now we have 3 main courses on financial planning. One is called Biashara Smart. That one is mainly for business owners. I mostly focus on small business owners on how to manage their finances as a business, because most people have gone into business but they don't know how to handle the money bit. So they find themselves mixing up personal finances and money from the business, or they're not able to grow their profits. You see? So that one costs 6,500. It's a 4 weeks course. So it's 6,500 and it has a wider range of things you need to learn about taxes for your businesses, how to even pay yourself as a business person, how to separate your business money from your personal business, and how to grow your profits, understanding profit margins for a business. And then you have this other course, it's called Investing Principles. That one basically is targeting people who have money, but they don't know where to invest or don't know how to start investing. So they have a saving, but they want to learn more about investing because those two things are totally different. So this basically targets them and explains to them different avenues of investing their money and growing their money and how to even manage risk when you're investing. And then you have the third course called Smart Money 101. Now on Smart Money 101, this is basically for everyone and anyone who is green into saving and investing, because it covers a wider range from financial planning, that is managing your debt, how to improve your income streams, how to manage your expenses, budgeting and all, and now coming into saving and how to grow your wealth over time. So for Smart Money 101, that is 14,500. It's an 8-week program. For Investing Principle, it's also a 4-week program at 7,500 shillings. Yes.
So is it full time? Like, does one need to come there the whole day to be taught how?
No. Again, thanks to Corona, we can still go online. We do we do classes online. So we give materials to students once they enroll. We have materials in form of documents. So they send documents, and also we have our WhatsApp support group on the side. And every week we have to do a Zoom session to just go through over what has been sent to students and to understand better. Yes.
You know, Corona has taught people that you can make money while seated at home.
Yes.
You can work online, which most of us didn't even know. And as much as it has brought more harm and disadvantage most of us, at least it has taught us lessons.
Yeah.
And
lessons.
Tell us, where can one invest right now during this pandemic? You know, there are those businesses that were shut down because of Corona, and employees were laid off.
Yeah.
Some were told maybe to work from home.
Yeah.
You see. So right now, someone may be having money, I don't know how much. How can they invest? Where exactly can they invest for them to get benefits?
Okay. Now, we have different avenues for investing someone's money. And especially, I mostly advocate in the financial markets, because that is where mostly young people have no idea or how to start, or know about it but don't know how to start it. So we have the financial markets, and we have the businesses that people can invest in, different businesses. So when it comes to financial, during this pandemic time, right now things are improving a bit. So you can see the markets coming up. When you check the markets, by markets I mean like looking at the Nairobi's Securities Exchange. We have different companies that are listed at Nairobi Securities Exchange. So you can invest there through buying shares, you know, buying equities of different companies. So you have different companies listed with different counters. So you can buy your shares at the Nairobi Stock Exchange. And things are looking good. So, yeah, someone who wants to invest in it can go and look at different companies which are doing better. Then you have, you can buy actually government bonds, government bills. Actually, Kenya, we have the best returns, because if you look at a market like the US market, the bills and bonds are actually affected by interest rates, and interest rates in the US are very, very low, meaning the returns on government bonds are really, really low. And so if you look at the Nairobi Stock Exchange, you'll find that most investors are foreigners, because there's something they know about our market that probably as local people don't know, because lack of knowledge. So buying a bond and a bill, especially bonds, they have really good returns compared to most markets right now. So anyone who has money, I can urge them to buy a bond, because it's also an investment that preserves your capital. You're sure of getting back your capital at the end of the term, plus the interest and on that investment. And we also have business ventures. You look into what business are you able to venture into, you know? People who actually went into selling masks really made millions of money during Corona when it started. So we need to be keen on looking at how markets work, the fundamentals of the market, which are things which are really selling right now. Those are things, you don't just jump into a business because you've had someone else is doing it rightly or is making profit for them. So get to understand what is this that you're best in, you're good at, you can make money out of it. So we have different, you can go even into real estate. We have Airbnb right now. You don't have to own a property to go into real estate actually. You can go into real estate as well through the Nairobi Securities Exchange. That is through buying rates. Rates is a real investment, real estate that are listed at the Nairobi Stock Exchange. So you buy through them. So you don't have to own a property to even invest in real estate. So we have different and so many other avenues, and we have alternative investment that are coming up. You've heard of the cryptocurrency market. I know, yeah. So you don't necessarily need to buy Bitcoin. You have so many other coins that are coming up and are doing so well. So you just need to understand the fundamentals of the market. Get to analyze, do your research and understand in this market, how does it work? And something people need to understand is in alternative investment, it's a very risky kind of investment in markets. So the higher the risk, the higher the return, yes, but you need to know how to manage the risks. Yes, understanding the fundamentals before you go to any business or any investment is very, very key and important. Yes.
And I understand you've dealt with many people who come to you, they need you to advise them. So from what you've listened to from people, what do you notice? What are the common mistakes that people make, especially the youth, when it comes to money investments?
When it comes to money investments, especially as the youth, I would say the one big mistake we make is procrastinating and not starting to invest. So yeah, they come to me, they want this advice, I give them all the advice they need, but they don't put the initiative of starting to invest. And that is procrastination. And even me, I wish I knew earlier some of these things. So the earlier you start, young people, we have the advantage of time when it comes to investing, because investing involves some risks. And young people, we have that advantage because you have the time to correct any mistake that you make in the market. You can take up higher risks. And when you take up higher risks, meaning markets always correct themselves somehow, because right now we have the pandemic, but the pandemic is going to end and the market's going to correct themselves. Things are going to go back to normal. So meaning you have time to wait and let your investment make money in it. So that's one mistake young people we make. We wait until we think maybe we need to be older enough to start investing. Another mistake is wanting to make quick money. Investing is not fun, actually. It's a journey. It's not an event that you expect to put money here. And so many young guys come to me and tell me, which is this investment that I can put money in, and then I start earning this certain amount, like by tomorrow or next week. And there's one who even asked me, like, can I invest in Forex? I know I can invest in Forex and then make this huge amount of money. And then I told her, okay, Forex is also a very risky market. So we'll be looking into something else. Then she asked me, okay, so what can I invest in? But I don't want risks. I don't want to lose my money. I told her, if you want to earn high returns, be ready to invest in very risky investments, especially in a short term.
You have to risk.
You have to risk, especially in a very short term. But if you want to be, that is mostly being gambling, actually. But a good investor needs to put in time, because time allows things to work out themselves, and it allows the money you put in to earn the interest on it. So another thing of starting early is the compound interest. It's very powerful. Compound interest means the money that is the interest earns an interest that earns an interest, so it compounds on itself. So when you start early, someone who starts at 20 and someone who starts at 40, eventually both of them at 60 have quite different amount of money. You get? So that thing of wanting to make quick money in investing, it doesn't go far. Even those ones who earn a rotary and they don't know the fundamentals of investing, they just spend all the money and finish it and not invest it. And then another mistake is not asking enough questions. Young people, we don't ask enough questions. Yes. Ask these things that come online and they're scamming. Most of them are scams, So young people they see the returns and they are driven by it. And these are people who know how to get the young people and know what to do. So they don't ask the questions like, how much can I lose? They're asking how much can I make? You know, in investing, you look at the risk more than the returns. You need to ask how do people make your profits? How do you make your money that you're giving us? You know, when you ask such kind of questions, you'll even identify a person who is a scam, because either they will dash and disappear, or they'll give you more answers. So when they give you answers, again check. Check by asking even your friend or someone close to you. Most young people are doing these things in their bedrooms and hiding, which is very wrong. So you need to also get out and ask, okay, I've seen this and this sites. They're saying this is what you can earn. Can you kindly check what's the address? Where are they located? Who are the directors of this company? What are they investing in? You know, because most people go online, they open sites and they're told you can earn this amount per day, per month. But they don't ask, how is this money made? You know, so most are even told, like, recruit people. They don't understand. The more you if you recruit this person, the money you're earning is
I was just about to talk about that, because personally I've gone through that.
Oh, you have?
A friend of mine came to me saying that, you know, you join this with 20,000 and then you bring two people, one on your right, one on your left, and then when they bring in another person, you get a half of that. And I'm like, really?
That's
how am I going to convince someone to come and give them 20,000?
Give them 20, and this is someone you are telling should make money, you know. So you're telling me to make money, but you're telling me to give you money. It doesn't make sense.
It doesn't make sense.
That is not investing, because it means this other person is going to earn from what this other person is bringing. Not actually, they're not putting this money in any investment for it to grow. So we need to ask more questions as young people as well, and start early. Don't be afraid to start early. When it comes to investing at the Nairobi Securities Exchange, you can even start with 2,000 shillings. Yeah, because you have stocks, minimum stocks to buy is 100. So you have stocks which are like 4 shillings. You know, but you have to get to understand if it's a good stock, first of all. So for example, if you want to buy a Safaricom stocks, right now they're like 40 bob. So meaning for 100 shares, how much is that? That is 4,000 shillings. So you don't have to wait until you are, I don't know, a millionaire or something to start investing. So just start investing like now and let it grow with time, and ask questions and get to do research. Let us be, I think most young people don't like reading, but when it comes to finances and all, financial literacy, we really need to get into details and get to learn. Yeah. Yes.
So, there's this question I was to ask you. There may be some people who are privileged to get inheritance from their parents.
Yes.
You know, this is not something you've worked for. This is something you've inherited. And maybe you've got that excitement and all that. So what should you do so that you don't maybe end up using the inheritance in a bad way?
Okay. I think even in Kenya, we've seen so many rich families. Their fathers have passed on, but they've remained behind and fought over the wealth. So again, this comes to teaching our children financial literacy. So most have been brought up in this way, but they don't know how to manage this kind of money. Their parents have had their fund managers on the side managing this money for them. Then they've been abroad, just came back to fight over the wealth. So one thing I would say is people who inherit wealth need to understand to think before they spend. It's just common sense that you've inherited this money. Most of this money that is inherited, 70% is lost in the second generation, and 90% probably by the third generation is gone. So you need to just be a good steward. You've inherited this money that you've not even worked for. So why don't you also become a good parent to your children and make them happy, delight your heirs as well, by actually having a good plan and some little care and some common sense to know that this money you've inherited, you need to put it to let your children also inherit. So think before you spend. And then most of them also tend to just let me say fire the people who've been working for their parents probably, because this wealth mostly is managed by fund managers. Fund managers are these companies which invest on behalf of other people. So they don't even sit down with these people and understand how has been my dad been making this money and maintaining it. So you need to put investing as a priority as well, and put this money to continue growing, not to spend it. Most of them just want to buy now more cars and spend it more. So one thing they need to do is put investing as a priority and not just spending it. And also get to understand your financial position as well yourself, and know, do you have any debt spending? Did your parents have any debt? So that when you inherit this money, the first thing you need to do is clear some debts first of all before you start spending. So when you clear these debts and get your financial plan in place, and then think about your children as well, then you can have that wealth going down to your children and your other children. Sometimes it's just common sense. Fighting over wealth that has been left, mostly it ends up into lawyers' hands. It disappears because lawyers will come in and these things will go into court over and over for years, and they earn their fees. So the money usually just disappears and no one gets to earn that money. So I'll urge them to have a plan, and don't spend fast before you think. Think fast before you spend. And then that last bit of what did I say? Is it spending? I'm repeating myself. They shouldn't spend so much before they paying up debts. Most of these families also have big debts.
And talking about debts, you know, I feel like you should address this issue of just borrowing. You know, there are some of us who just think, since Fuliza can give me this amount, since I'm sure he can give me this amount, so I should go ahead and take. Like you find saving is a big problem because uko na madeni every now and then, ukosi madeni. And then there is the other problem whereby someone saves, but you don't have any idea of where to invest the money. So you just keep on saving. And then unafika mahali, you get a problem. So you go withdraw the money, then you start all over again saving. So
okay, when it comes to debt, unfortunately, most time people are only having consumable debt. These are debts that you just take, not for growth, not for business. These are debts you take mostly, and you end up buying clothes, buying shoes, going for outings. You want to impress your friends. So that's what most time people are doing, unfortunately. So I think the central bank is coming up. Is it the parliament or the central bank? Coming up with an act to cap these mobile lending apps. Most of them, over 600 of them actually have been put on hold because most are not regulated. So the central bank is coming up to regulate this mobile loan. But still, you have the insurance and the small loans that people take and just consume it. So that's where financial planning comes in. Have goals. When you're taking this loan, what are you taking this loan for? Is it for growth? And when you're taking it for business, are you assessing the return of your business, the return on the investment first, and the cost of your debt, how much interest you're paying? So you need to assess that before you even take your debt. You see? So there's so much you can talk about debt, actually. And when it comes to investing, this is where the investing principle class comes in for me. I teach on the various investment avenues and vehicles we have available that most people do not understand, because inflation is on the power of your money. You know, the 1,000 you use now is not the 1,000 you can use maybe next year. Inflation will eat into your money, and so when you're just saving your money and it's not making money, it's not growing. When something happens, you'll go take that money, and probably even what you want to use it for will not be enough. The goal you had in mind will not be enough because the money has not been growing. But when you're investing basically means you're buying assets that will give you back a profit or a return. So that is where the investment classing we teach the various investment assets that are available that someone can invest in.
And for those of us who are maybe thinking about investing, is it a walk in the park, or do we expect any challenges?
Yes, expect challenges in investing. Investing, like I said, it's not fun. You know, it's like painting a wall You have to wash it dry slowly. That is investing for you. Investing is not it's not a Ferrari moving on the road. It's like I'm mkokoteni being pushed on the road. Investing is not fun. Don't expect to have much fun in investing, because you have challenges like the market's collapsing. We have different kind of risks involved in when it comes to investing. Those are risks in the market as a whole, internationally, globally, like the pandemic that has happened. We have risks that involve a sector of the company you've invested in or a business that you're running. Maybe you're selling tomatoes. There's bad weather, something happens to farmers or something. So you have investment that happened to that particular company that you're running, that particular business you're running. It might run out of money. You might have people stealing your stock. You know, so you have challenges in it, because investing is not only like the stock exchange. That business you're running is an investment to you. The real estate. So we have risks involved when it comes to investing. You're supposed to expect those challenges, and the more you expect the challenges, the better, because then you'll put measures in place to help you when that time comes. But if you don't expect those challenges, you'll sit and wait, and you'll be caught off guard probably. And then what do? That's where people give up or something and stop their investment journey. So you need to expect challenges when it comes to investing. Yes, it's not fun, it's not walk in the park. But if you get to know it and you get to if you get to earn the returns slowly by slowly, then you'll enjoy it and continue the journey. Yeah.
Thank you so much for showing up, and thank you for keeping time. It's been a pleasure having you.
It's been a pleasure being hosted as well. Thank you as well.
It's been a pleasure hosting this show. I'm your host, Beatrice Kageha. Please remember to subscribe to our YouTube channel. Thank you.